let's look at where do we invest? Where do you invest? We're going to be sharing some, models with you, but before I do that, we invest in various asset classes. This is where the education will start building up now. We invest in various asset classes. So the knowledge of these categories or classes of investment will help you. That's actually the intelligence that you require to be able to engage with investment. So we invest in various asset classes, right? Now, I would love to share with you this morning what we refer to as the RISE asset categorization model. So the RISE there is intentional, it's an acronym, and we use that intentionally so that people will keep remembering. So every time you're eating a bowl of rice, you remember that you need to invest. You remember that you need to acquire assets. This is so vital. Everyone needs to build an asset portfolio. You need to build an asset portfolio. And this is what will be inside the asset portfolio using the RISE model. Now, the first thing, the R there, is retirement funds. Okay. So you need to start thinking, and there is no age that is too young. You need to start thinking about pension funds or your retirement funds. And this could be made up of, your private pension, right? SIP is an example, self-invested pension plan, right? Or SAS. Or it could be your company or your employer's pension. Okay. So if you're working at the moment, you can actually speak to your employer to take more money into your pension, take more money from your paycheck and put it towards the pension for you. See, it's amazing. I've seen this work like like you know like a miracle, right? It is amazing what happens when you make these decisions, because we live, for those people who live in the West, we live in a system where if you're not careful, you give everything to the taxman, especially when you come into certain income bracket. Some years ago, I realized that I was giving so much away, so much away to the government, right? I was paying over my dues because, I was being penalized for, being an high income earner. And I thought that is just not fair. So I made a decision that, you know what, I'm going to review my finances and I'm going to put more towards my private pension. And that's exactly what I did. And less than 2 years later, I was shocked by what I was able to accumulate over that short period of time. And all of that money would have disappeared, right? It would have been taken by the taxman, and maybe the little that comes to me, it would have been taken by, African taxes, just giving money to people. Because some of us, we love giving so much, right? So we find it difficult to even hold back. And that's why you need to set up structures in place that will just enforce the discipline for you. And SIP is one of them. Now, I've got so much money in there now that I can't touch, which is good. It's a good news, right? I can't touch it until I get to a certain age, which is fantastic. So I know that I've made some good plans for the future, and I'm still going to put more into it. Okay. So retirement funds are so important. You need to do that. So speak to your employer. If you think you can spare some little cash, tell them to put more money out of before, because it's tax deductible, right? So they take it out of your gross, they put it towards your pension, and then you pay tax on less. Okay, so I promise you, you can live on less, because that was what was deluding me before as well. When I was looking at how am I going to be able to survive on this? As a matter of fact, when I called up the umbrella company that was managing my revenue at the time, and I said, I want to put this towards, they said, no, that is too much, because it's not common. A lot of people don't do that. He said, you serious? You want to put that much in there? I said, yeah, go ahead and put it in there. I'm not going to die, right? And here I am today. I'm still alive, right? I'm okay. I'm living well. So you're not going to die. Take that plunge. Put the money away. Lock it away, right? So that's it for you. Pension fund is the first R, or the first asset category that you need to put your investment into. The second one is the most popular one, right? Is investment vehicles. Investments, yeah. So people talk about these, that's the most popular one, stocks and shares and all that, So that's the most popular one. But in Prism Check, we've actually sub-categorized that as well. So under the investment, and we're going to be paying attention to these in the subsequent slides. I'm going to, dive deeper into the investment vehicles. So I'm going to be able to break that down for you further. But they're the most popular ones, like I said, and we've grouped them into business asset, appreciating asset, and risk asset. Okay, that's what we've done. But I'm going to talk more about that. The C there is cash. Okay, it's good to keep some cash. So this is, it's liquid, it's capital in its purest form. So you just keep it in some savings account. It could be, like a fixed term account. I do have this as well, where I just, lock it away for 1 year. I put money in there, I can get it for 1 year and they'll pay me interest. So even if I need cash right now and I'm looking at my savings balance there, I can't touch it. It's good, right? It's painful if you need so much money now, it's painful, but there's a joy that it gives you when you say, okay, it's going to come back to me. So you just put it away. Like the good book says, you cast your bread upon many waters, after many days you'll find it. So you just put it out there. Okay. So it's important to have some cash as well. You can have some in easy access accounts. That's fine. I've got those as well, but I recommend you, put those capital into, especially when the funds are coming in, when you have a lot of money coming into your life, just make sure you lock them away very quickly. Okay, lock them away very quickly. I've experienced it where I didn't lock them away very quickly and they travel very fast because there's so much need, in our world, and you just want to do so much, right? So you just put it out there, but make sure that you have a strategy that will lock some away for you. The last one is equity. Now, this is for people who have properties. If you don't have your own home yet, right? you don't have this. But if you have your home already, try as much as possible to pay down your mortgage very quickly. When you put more money into paying down your mortgage, right, you're actually building up equity in your property. That is an asset for you. It's not necessarily an asset that, people talk about releasing equity. Yes, it's locked there, but it's free. As far as I'm concerned, in my life, it's free. There is some wisdom in the discipline of keeping something locked. Okay, you just don't want everything to just be released, right? So there's a lot of adverts that says, do equity release, get some money and all that. Except you know exactly what you're doing, I'll advise against it very strongly. Keep your money in your house. Get that property, that roof over your head, debt free as quickly as possible. Become debt free on that property as quickly as possible. And you just you have your house over your head. There's no mortgage to pay. It's yours. No bank is going to come and knock on your door and take it away from you. Okay. So, but it's still is classed as your asset. It might be a non-current asset, but it's still an asset. So that's a rice model for you: retirement, investment, cash, and equity. So every time you're eating a bowl of rice, always remember to invest. Okay. Now let's take a look at the investment vehicle. Like I promised. Again, we've got 3 subcategories here that we strongly encourage people to consider when it comes to investing. The business asset is the first. So this is investing in your own ideas and ventures. It promises the best return on investment, but at the same time is risky, right? Because you could lose your capital. So when you earn income, make sure that, maybe this might not be for everyone, but for those who are entrepreneurial in spirit, you want to put some money aside that you want to invest in your side also, right? You want to put those money aside and say, okay, this is what I'm going to, I'm going to put this money aside. I'm going to invest in my business, maybe building website, maybe attending seminars, paying for training. You just put that money aside. You're investing in your business. So that is one of the subcategories of investment class that you can invest into. And these pay so much because by the time this matures, by the time you have a business, because a business is not really a full-grown business, is not really a side hustle. So a side hustle can transform into a business, but a business is not a side hustle. A side hustle is just a second job, right? You're still doing it, but until you have systems in place, you've got what we call capability that is driving profitability. So your capability is essentially, the people, the team that work within your company. You've got processes in place that drives what you're doing, and you got technology that enables it. Once you have these three, then you have a capability. Then you're talking about having a business. Okay, so that's really a business. But before you get there, you need to invest. Because when you're talking about business, you're investing in marketing, you're investing in operations, you're investing in technology, you're investing in all kinds of things, right? So that's the first one. The second one is appreciating assets. Oh, this is one I recommend so much. As a matter of fact, this is what we're going to be talking about, excuse me, later today when we get into the webinar. Appreciating assets is so important to have. Buy lands, buy properties, buy real estate. And I strongly advise against selling, except it's exceptional, necessary. Except it's like taking a lot of money away from you that you can sell and reinvest into another real estate or something like that. So invest into appreciating assets. We don't have a lot of it. It's primarily land, because land is limited in supply. So as demand grows and supply is limited, it will appreciate. It's a law of economics, right? So it will go up in value. So invest in real estate. And Prism Check is doing something quite amazing, which we're working on at the moment, which we allow people. Someone will say, oh, but I don't have a lot of money. I only have £5,000. How can I invest in real estate? Maybe to gain on the property ladder, it will cost you about 40,000, 50,000. You're like, no, I don't have that much. I only have a little. But you can start investing those little as well in some of the innovative products that we're going to be releasing shortly. You can put your £5,000 into a property, and my £5,000 is in that property alongside with other people's money as well. Okay. So appreciating assets is important. And the last one is the risk asset. So this is the one that is risky. Like I said, this is your equity. You're talking about putting money in stocks and shares. And let me quickly sum these. Your pension as well, the money that you put away in SIP and all of that, you invest those in equities as well. So you can invest them into risk assets as well, right? But it's shielded in that portfolio. So you might not be able to freely invest. For example, I can't invest in cryptocurrency with my pension fund. No, the provider will not allow me to do that. So I can only invest in stocks like Tesla and Tesco and the rest of them. So, and it's amazing the performance. If I open my app now and actually tell you what my Tesla shares that I bought some years ago was done, is almost done 100%. The Tesla shares that I bought a few of them different times, and I looked at the other day, it was almost over maybe a 99% return on investment. It is so these things do well. You just need to have the right information, have the right knowledge, and you do this now. So your risk asset is you putting money into stocks and shares, and you put money like into forex trading, which are highly risky, or crypto trading as well, because they're volatile, right? But the returns can be phenomenal as well if you know what you're doing. So risk management is important, and you need to have the right training to be able to do these things. Right training is so important. We were doing some training on DeFi within Prism Check. Last month we had a trainer who taught on DeFi, and who's training people on DeFi. So you can register for that class, attend the training. I tell you, I had to pay to attend the training myself, and I've seen some very good results. You just need to be trained. Guess what? Flying a plane is risky, right? Flying a plane is risky. I mean, the Wright brothers that came up with the idea of flying a plane, people were against them. People thought they were mad, right? They were like, what? You don't want to do that kind of risky stuff. But when you have the right system and structures and the right training, it's okay. So every one of us, for most of us that are from other countries that flew into the West, we had to come in by plane, right? It's risky, but we did it anyway because we're confident that the pilot flying the plane was or is trained. So that's what gives us the confidence to step into the plane, right? You don't even know the pilot, right? You just believe that he's trained. So if you get the right training, you can do risky stuff as well. But obviously, with the right training, with the right knowledge, you know how to navigate your way around there. Okay, so also note that you can have a blend of appreciating assets and business asset. For example, if you're buying a land for agricultural business, for example, so that's a blend of, yes, I've acquired this land, and then I'm doing this agricultural business on it. So there's a blend of the two that you can have. Like I said, risk asset is also related to your pension as well. So there's a blend of all of these things. So that's where to invest. I hope that was quite eye-opening for a lot of you. Okay,